Hello everyone, a very good evening. So first of all, congratulations to everyone who have cleared your ABFM and other papers. And tomorrow is your last compulsory paper BRBL exam, and this is the final revision. We'll be revising all the four module once again. I have the most important questions for you, case studies, and we'll be discussing the theory alongside. All right. And at the end of this session, you'll also get the PDF that you can download and use for your revision. All right. So, once you are here, just mark your presence. Try to be active and answer all the questions. Okay, so first we are starting with our module D because it is the most important. It holds the highest weightage. We will cover the questions, case studies from all the units of module D. Then we will go for the module C, B, and A. We will go in the reverse direction, starting from module D, and then we will end with our module A. So let us start with the first question for today. Okay, in the marathon for module D, we had completed till our Companies Act. The Limited Liability Partners Act was left. So let us start with this unit first. This is our unit 29 of our module D. Here's the first question. Consider the following statements about limited liability partnerships. LLPs incorporated in India are treated as body corporates. Foreign LLPs are excluded from the definition of a body corporate. A corporation's soul is expressly excluded from the definition of body corporate. Cooperative societies are included within the definition of body corporate. So, when we talk about the limited liability partnership, it is under the LLP Act of 2008. Some features are there of a partnership firm, others are there of a company. For example, there is perpetual succession. It is a body corporate. It has a separate legal existence, separate from its partners. The liability is limited by whatever agreement is between the partners. It is not unlimited. They are not personally liable for all the debts. Okay, so what is included? Body corporate. LLP is a body corporate which can be LLP under this act. It can be a LLP incorporated outside India, but it will not include a corporation sole, a cooperative society registered under any act, under any law for the time being in force. All right, so the correct answer should be C. 1 and 3 is correct. Foreign LLPs are included when we talk about the limited liability partnerships. Those body corporates which are incorporated outside India, but they have a place of business in India. They are included. A corporation sole and cooperative societies are expressly excluded. Okay, so that is the meaning of a body corporate. What is body corporate? It means it has its existence separate from the partners of the firm. It has certain characteristics which are similar to that which a company constituted under the Companies Act has. Okay, it has perpetual succession. Even if all the partners leave, the LLP will still continue with the same mutual liabilities of the leftover partners, and any change in the partners will not affect the existence, rights, or liabilities of the LLP. That is why there are some characteristics of a partnership and other of a company. All right. Next question. Consider the following statements about the LLPs. An individual or body corporate may become a partner in an LLP. An undischarged insolvent is disqualified from becoming a partner if the number of partners falls below 2 and continues for more than 6 months. The sole partner is liable for the obligations incurred during this period. A minor can be admitted as a partner in an LLP with the consent of all the partners. So, when we talk about the partners in an LLP, answer this question. Meanwhile, I'll explain you the concept. Which of the following are correct? 1, 2, and 3, 1 and 4 only, 2, 3, and 4, or 1, 2, 3, and 4. So in a LLP, there are partners. There's also a mandatory designated partner. When we talk about a partner, who can be a partner in the LLP? Any individual or body corporate, yes, can be a partner. But if they're found to be of unsound mind, or they are an undischarged insolvent, they're applied to be adjudicated as an insolvent and the application is pending, then the individual is not capable of becoming a partner, right? Every LLP must have at least two partners, and if at any point this is reduced below two and it continues for more than 6 months, so let's say in December 2025, only one partner remains and they continue for more than 6 months. So beyond the 6 month period, this one person will now become completely liable for all of the obligations of the LLP. All right. So this is the point regarding the partners, right? So the correct answer should be A, 1, 2, and 3. Minor cannot be admitted as a partner. As per the Indian Contract Act, minor is not capable of entering into a valid contract. Minor cannot be a partner in the firm, in the company, or in the LLP. They can be admitted into the benefits. That is true. So the correct answer will be 1, 2, and 3. All right, 1, 2, and 3. Okay. Again, about LLPs, an LLP agreement must be in writing. It defines the mutual rights and duties of the partners and of the LLP. In the absence of an LLP agreement, the provisions of the Companies Act 2013 automatically apply. The LLP agreement can be varied only with the consent of all the partners. Answer this question, everyone. Which of these statements are correct? 1 and 2 only, 1, 2, and 4, 2 and 3, or 1, 3, and 4? I'm giving you 10 seconds to answer this question. This is this is actually a very simple question. You can answer this. What will be the correct answer? What will be the correct answer? So, when we are talking about the registration and incorporation of the LLP, two or more persons who are associated for carrying a lawful business, they want to share profit, they subscribe their name into the incorporation document. It will be filed with the registrar of the state in which the registered office of the LLP is situated, in the format which will be prescribed, right? All the requirements of the act will be followed. And when we talk about the registration, the registrar will, within a period of 14 days, register the incorporation document, give a certificate. They will accept the statement delivered as evidence. They will also issue the certificate, right? The registered office will be where the all the communications will be made. Okay. But when we talk about if there is no separate agreement between the partners regarding their mutual rights and liabilities, then the Companies Act will not be followed. The LLP Act of 2008 has provisions that will automatically apply. The provisions of the LLP Act 2008 will automatically apply. So the correct answer should be 1, 2, and 4 only. And anything, if anything has to be changed, it can be varied only with the consent of all the partners, not without that. So you should also remember the partners and their relations in the LLP. As soon as the LLP is incorporated, all the persons who subscribed their names into the incorporation document will become partner, right? Any other person can also become as per their agreement. Their mutual rights and duties will be determined as per the agreement, and if the agreement is not there, then in the LLP Act, in the first schedule, it is given what will be followed. So the correct answer here will be B. Every LLP must have at least two designated partners, both of whom must be individuals. At least one designated partner must be in India, that is present in India for more than 182 days in the immediately preceding financial year. That is, at least one designated partner will be a resident in India. Consent of the designated partners must be filed with the registrar within 30 days of appointment. A body corporate can be appointed as a designated partner if it nominates an individual. So, what should be the correct answer? When we talk about the designated partners, yes, at least two designated partners who are individuals, and at least one of them shall be a resident in India, right? So these partners will be there that have a good background, that have experience, that will be managing all the management, the work of the LLPs. They shall first obtain the designated partner identification number. Then, with their consent, they will be appointed. So, they will be responsible for doing all the acts, matters required to be done by the LLP for complying with the provisions of the Act, submission of returns, making of accounts, furnishing of information or document, and they will be liable for all the penalties imposed on the LLP. All the penalties imposed on the LLP will be the liability of the designated partners, and any contravention of those provisions, again, they will be liable. So these are the roles and responsibilities of the designated partners. So the correct answer will be C, 2, 3, and 4, both of whom must be individuals. When we talk about the designated partners and we want any body corporate to become a designated partner, any body corporate to become a designated partner, then they can act. All right, nominees of the body corporate shall act as the designated partners. All right. In case of the LLP, if the partners are body corporates, or if one or more of the partners are individuals and body corporate, at least two individuals who are partners of such LLP or their nominees of the body corporate will be the designated partner. Okay, so a body corporate can be appointed as a designated partner if it nominates an individual. So 2, 3, and 4 is correct, 1 is incorrect. As it is, 1 and 4 are contradicting, right? So that also you can use for elimination. So the correct answer will be C. Designated partners are responsible for the compliance with LLP Act provisions and filings. They are personally liable for all the debts of the LLP. They are liable for the penalties imposed on the LLP for non-compliance. In case of vacancy, a new designated partner must be appointed within 30 days. So, the responsibilities of the LLP I've already told you. They are responsible for the LLP Act and provisions, compliance. If there is any contravention, they will be liable for the penalties. If there's a vacancy in the position of the designated partner, another person should be appointed with their consent and filed with the registrar within 30 days. True, but they will not be personally liable for all the debts of the LLP. No. Only if there's a contravention and penalty is imposed, then they will be liable, otherwise not. Okay. If a person makes a statement which is false or they does not believe it to be true, they are punishable with an imprisonment, and the LLP is also punishable with a fine. There, the designated partner is liable. Yes, the correct answer is C. 1, 3, and 4. They are not personally liable for all the debts. Good. Consider the following statements. At least two persons must subscribe to the incorporation document for a lawful business with a profit motive. The incorporation document must be filed with the registrar along with the prescribed fee. A false statement in incorporation attracts imprisonment of up to 2 years and a fine between 10,000 to 5 lakh rupees. The registrar must issue a certificate of incorporation within 30 days which is conclusive of the evidence of registration. When you are in the exam hall and you're going through the options, take your time. 2 hours is enough for the BRBL paper, right? Take your time, read the options very carefully, and see what the statements are saying. Right. So the first statement says that for the LLP, two persons should come together for a lawful business and to share a profit. If they come together for a social relationship, not to conduct a business, not to share the profit, it will not be a partnership. It cannot be a firm. It cannot be a company. So the first statement should be correct. Then I already told you the incorporation document will be filed with the registrar of the state in which the registered office of the LLP is situated. So this is also true. If along with this incorporation document, in the incorporation document, certain statements have to be provided, right? There will be filed along with the incorporation document a statement made by either an advocate or a company secretary or a chartered accountant or a cost accountant who is engaged in the formation of the LLP, who has subscribed their name into the incorporation document. All the rules that are made, all the provisions of the act have been complied with. Okay, if such person makes a false statement, yes, they will be punishable. This person who is making the statement will be punishable for a fine that can be extended to 5 lakh rupees and imprisonment up to 2 years. Correct. So this statement is also true. But the fourth statement says that the registrar will issue a certificate within 30 days. No, when the application has been made, the registrar will issue the certificate within 14 days, not 30 days. All right, within 14 days. So the correct answer should be A, 1, 2, and 3. All right, this is the whole process of registration. Okay, this is the whole process. What is the effect of registration? Now the LLP becomes capable of suing and being sued in their own name, acquiring, owning, holding, developing, disposing property, whether movable or immovable. They can also have a common seal. They can do every other act that a body corporate may be lawfully allowed to do. Right? So these are the features, provisions of registration. Right. Subscribers to the incorporation document automatically become partners of the LLP. Rights and duties of the partners are governed by the LLP agreement filed with the registrar. In the absence of the LLP agreement, provisions of the first schedule of the Act applies. A former partner continues to be deemed a partner until notice of secession is given to the registrar or third parties are made aware. So, what should be the correct answer? Which of these statements are true? 1 and 2 only, 1, 2 and 3, 2, 3 and 4, or all of the above? Everyone who's present here, please like the video, share the video so that others can also join and just try to be active, try to answer. You all have studied all of these acts, all of the provisions. Try to answer. Okay. So the first statement I've already told you. When the incorporation document is prepared, anyone who signs it, they will automatically become a partner. Correct. The rights, duties, they are to be prepared as agreed upon between the partners. It has to be filed with the registrar of the state. If there is no such separate agreement, provisions of the LLP Act first schedule will apply. Now, secession of the partnership. When a partner, they cease to be a partner in accordance with the agreement, or on their death or dissolution, or they're declared to be of unsound mind, or they have applied to be adjudged as an insolvent. When a partner has ceased to be a partner, the former partner is to be regarded still a partner till they have given a public notice. Why? Because the public might still not be aware and they come into a relationship with the partnership. Okay. Also, they will not discharge themselves before the obligation to the other partners and to the LLP is fulfilled. right? So they will still be liable for the obligations. Similarly, when a partner ceases to be a partner on the consequence of their death or insolvency, whatever, they will still be entitled to receive the capital contribution that they had made. They will be entitled to receive the right in shares in the accumulated profits of the LLP, right? They will also, if let's say the partner has died, so the consequence of death or insolvency will be given to the legal heirs or the nominee. Okay, so the correct answer will be D. All of the statements are correct. Okay, all of these statements are correct about the cessation of the partnership or the registration of partners in the LLP. All right. Okay, so the correct answer is D. Every LLP must file a statement of account and solvency annually, which must be audited. The central government may prescribe accounting and auditing standards for the LLP after consultation with NFRA and ICAI. Annual returns must be filed within 90 days of the closure of financial year. Penalty for default is rupees 100 per day, subject to maximum 1 lakh rupees for the LLP and 50,000 rupees for the designated partners. Penalty means if they fail to furnish the annual return or they fail to report whatever functions are there, the designated partner will also be liable. So, what should be the correct answer? The reporting requirements. What will be the correct answer? So, as per the section 34 of the LLP Act, every LLP has to file the statement of account and solvency duly audited, following all the rules, paying all the penalties levied in case of non-compliance. The auditing of the accounting standards, yes, the central government will prepare these standards in consultation with the National Financial Reporting Authority. Okay. And then these things have to be followed. The Institute of Chartered Accountants of India, their standards are also recommended. If any LLP fails to file the return before the expiry of the period, they will be liable to pay a penalty of rupees 100, subject to 1 lakh rupees for the LLP and 50,000 rupees for the designated partners. Right? But the third statement says that the annual return has to be filed within 90 days of the closure of the year. Is it true? It is not fixed at 90 days. It will be determined by the government within the prescribed time, whatever time is prescribed. Okay, so the correct answer will be A, 1, 2, and 4 only, not necessarily 90 days. It will be prescribed by the government in consultation with the both institutions. All right, so the correct answer is A. Debts of 20 lakh or more are enforced through the DRT. Debts below 20 lakh must be enforced through a civil suit. Suit for enforcement of mortgage is filed where the property is situated. Execution of decree requires prior attachment order before the sale of mortgage property. So now we are discussing the Transfer of Property Act of 1882. The Transfer of Property Act of 1882. So what should be the correct answer? When we are talking about the transfer of property, that is the transfer of property, interest is transferred to the mortgagee by the mortgager. Sale is the transfer of ownership, but mortgage is the transfer of an interest in the specific immovable property to secure the payment of money given by the way of loan. Right, so the transferor is the mortgager and the transferee is the mortgagee. Principal money includes the mortgage money includes both principal and the interest, right? Now, when we are talking about the enforcement, when the mortgager defaults, so yes, debts of 20 lakh or more are enforced through the DRT, correct? Debts below 20 lakh must be enforced through a civil suit, or now after the Lok Adalats, they can be taken to a Lok Adalat. But the Lok Adalat's award is also treated as deemed as a civil court. So that will be included in the civil suit. And the suit for the enforcement of mortgage is filed where the property is situated. Correct. So the correct answer will be 1, 2, and 3. Execution of decree does not require prior attachment before the mortgage property. When the decree is received from a civil court, there's no application required for the attachment. Separate attachment of the property is not required. All right. So if we are talking about the enforcement of mortgages through the court, the suit shall be instituted in the court of the lowest jurisdiction where it can lie. It will be instituted in the jurisdiction of the court where the property is situated. In subsequent mortgages, all the future mortgagees will be treated as defendant if there is more than one mortgage in the favor of the lender filing the suit. He shall sue on all the debts, right? So all of these things are there for making an application. And while seeking the mortgage decree, the decree holder can bring the property's mortgage to sale without first seeking an order of attachment from the court, right? Prior attachment from the court is not necessary. So the correct answer is A, 1, 2, and 3. Now, what about a lease? Lease of immovable property. A lease is a transfer of right to enjoy property for a certain time or perpetuity for rent or premium. Agricultural or manufacturing leases are deemed year to year, terminable by 6 months' notice. Other leases are deemed month to month, terminable by 15 days notice. A lease exceeding 1 year requires registration by a written instrument. Which of these statements are correct about a lease of immovable property? So, what is lease? It can be express, it can be implied, it can also be perpetuity. Perpetuity means forever. To enjoy the property for a certain time, the transfer of right is given in consideration of a price paid or any other thing which is given periodically to the transferor by the transferee. So, transferee and the transferor relationship is owner of the property is known as the lessor, and the person who is receiving the rights to use it is known as the lessee. So the lessee from time to time pay something in consideration, which is called the premium, right? Or rent. Okay, so when a lease is created of a movable property, then it is 1 month, deemed month to month, terminable by year, 15 days notice. Agricultural manufacturing are year to year, terminable by 6 months notice. Correct. So 1, 2, and 3. What about a lease exceeding 1 year? Does it require registration in writing or not? What should be the correct answer? Does it require registration in writing or not? Yes, it does require. If a lease is exceeding 1 year, it requires registration in writing. Otherwise, it can be an implied lease as well. But more than 1 year, registration in writing should be there. Okay. If, let's say, the period is not mentioned, then it will be perpetuity forever till the lessor calls back the property. So that is the correct answer about a lease. An actionable claim includes a claim to debt not secured by mortgage, pledge, or hypothecation. It also includes beneficial interest in movable property not in possession of the claimant. Transfer of actionable claim must be effected by written instrument signed by the transferor. Notice to the debtor is mandatory for validity of transfer. If debtor pays the transferor without knowledge of transfer, such payment will be valid. So, which of these statements are correct? 1, 2, and 4, 2, 3, and 4, 1, 2, 3, and 5, or option D, 1, 3, 4, and 5. About actionable claim. Actionable claim means a claim to any debt other than a debt secured by mortgage, hypothecation, pledge, correct, or to a beneficial interest in the movable property. It can be actual or it can be constructive, which the civil court recognizes as giving relief. The debt can be existing, it can be future, it can be conditional, or it can be contingent. That is an actionable claim. Transfer of actionable claim with or without consideration by an execution of instrument in writing. Always. The transferor should always make a transfer in writing. But there is no mandatory requirement of giving notice to the debtor before the transfer of actionable claim is made. So